All right, guys, back to work. Weekend's over. I know it always goes by too fast. That's all right. First week of a brand new month. Always a great time to be a trader. Welcome back. Of course, it's Monday evening. It's October the 4th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight, very important, my job is to help us find the best trades, setting up for tomorrow. That's Tuesday's trading session. I got a great video in store for you guys tonight. Lots of great trades setting up for Tuesday. S&P's ready, Nasdaq's ready, gold of course is ready, all the charts are ready. Got a great plan of attack ready for tomorrow. Glad to see you are ready right along with me. Speaking of tomorrow, by the end of this video tonight, you'll know my favorite trades for tomorrow. You'll also know some stuff to avoid to keep yourself out of trouble, whether you're trading on your own or you're trading with us tomorrow morning in our trade room. So make sure you stay tuned the entire video tonight. We'll cover all these markets, my favorite trades for tomorrow. Before we jump into the video tonight, though, as always, I want to make sure to remind you, make sure you subscribe to our channel. I publish this video every evening during the week. I don't want you to miss tomorrow night's videos. Hit that subscribe button. Hit that little bell icon so you always get notified every time we publish something new. If you have any questions, I love the questions. Drop those questions for me in the comment section. And if you guys enjoy this video as much as I enjoy making it, hit that like button for me. Really appreciate you guys supporting the channel. But make sure you guys subscribe so you don't miss tomorrow night's video. Speaking of tomorrow, let's get this party going. Intro is done. What do we got going on for tomorrow? Boy, I'll tell you, lots of good stuff on our radar. I got a range on the E-mini, range on the NASDAQ, and a range on the gold. Anytime we're talking about ranges, we know ranges act like magnets, right? So we're buying low, selling high. We're trading failures. We're trading breakouts. In this case, we're trading reversals. I'll tell you, there's a lot of really great trades here. Obviously the S&P and the NASDAQ, we're all bearish today. Big moves down here. Got some rising support trend lines, and I'll tell you, if these bears can't get their act together here, this could easily be a short squeeze. We got some ranges as magnets overhead, so I definitely have my eyes open for a short squeeze and a pop going back higher. I'm going to make sure we know 3 different ways to trade that short squeeze for tomorrow. But I mean, come on, all that bear momentum. It seems a little bit early to be talking about a short squeeze on this market, so I definitely would love to get that next leg lower, get some targets I'm looking at as we go. I don't care what direction we trade in as long as I get a good setup on it. Yeah, I'd love to be a buyer on it, but obviously, again, all this bearish momentum, definitely keeping an eye on the sell side here. I'm going to make sure you guys know where those trades are setting up for tomorrow. Over on the gold here, gold is kind of the opposite, right? It's a bull market into a range. Boy, there are so many ways to buy it as it pulls back. Again, 3, 4 different ways we can buy it as it's going higher. And of course, there's a range down there on gold, so I'm not afraid of trading the failure going back down to those lows, but it's going to be tight quarters down there. So it's going to be one specific type of price action set up. I'll be looking for most on that, so make sure you stay tuned here to watch the entire lesson tonight. We'll talk about the gold here towards the end. Tomorrow morning is a Tuesday. There's some big news tomorrow. Let's make sure we know when that news is, and we'll come back to our charts here, lickety split. Tomorrow, of course, is a Tuesday. Tomorrow, of course, is the 5th day of the month of October. Really, there's really only 2 big news events left this entire week. We got the ISM number tomorrow at 10 o'clock Eastern Time. Nothing really on Wednesday or Thursday, really. Get some jobs on Thursday, but everything points, of course, to that employment number, that non-farm payroll number on Friday at 8:30. So big news tomorrow. Keep it simple. Big news tomorrow is at 10 o'clock Eastern Time. You get that ISM services index. This will really be a good view to see how the third quarter went, and a lot of people are watching that number tomorrow. So if you could only be at your desk tomorrow for an hour or so, I would say 9:45 to 10:45 would probably be the best place to be if you could only be there for an hour, of course. Now, tomorrow morning and every morning, we'll be in our trade room. We open up every morning at 8 o'clock Eastern Time. We prep the charts tonight, do some light updates tomorrow, and then hit it hard tomorrow morning in our trade room. We open up every morning, 8 o'clock Eastern Time. I would love to have you there with me. I'll put all of the membership links you guys need. I'll put a button for you right below this video on our website, or I'll put a link for you guys in the description of the YouTube video. That's going to be the big news here for tomorrow, that 10 o'clock ISM Services Index. We also, of course, have this kind of back and forth right now, regarding debt ceiling and stimulus packages. So that's kind of the other lingering cloud hanging over this week. There's been a bit of, back and forth about the debt ceiling, and the U.S. President Biden today was actually on camera talking about why we should raise the debt ceiling and making an argument for that. So there's a lot of that going on right now. That may bleed into a bit of uncertainty in the markets this week. So we'll see how. That's obviously kind of a known unknown we have out there that could kind of flare up at any moment here this week. So definitely looking forward to, again, more volatility as always. First week of the month is usually a pretty volatile time of the month, right? End of the month, beginning of a new month. That transitional time is usually quite volatile. And with some big news tomorrow, I get some pretty high hopes, expectations for tomorrow's trading session. So grab that link in the description, and I'll see you there tomorrow morning at the opening bell. We'll trade this stuff together. Back to our charts here now. Ranges, and of course more ranges here in front of us. Why don't we grab the S&P tonight? And we're going to cover, there'll be a lot of similarities here, but I'm going to make sure I talk about some different variations as we go later on in this video. What's the most important takeaway right now on the E-mini S&P? I think there's really probably three big takeaways, three kind of key components here. One, of course, is this big bloodbath move down. We spent a little bit of time chopping around inside that range, but man, oh man, once 10 o'clock hit this morning, the market has completely collapsed and ran lower. So, of course, there's a lot of bearish momentum. That's why I said in the introduction, it's probably a little bit too early right now to go talking about a short squeeze or a rally going higher. It's definitely on my radar for tomorrow, but so much bearish in the market right now. Going to be careful trying to call a bottom when you have this much momentum. Usually whenever we see this much strength in one direction, normally we get another leg going lower, and I've got that kind of follow-up leg projected down here around that 49.5 area. There's also that 55 level down. That's a really, really nice spot there as well. So again, that's a really big factor on this chart. One, of course, would be the bearish momentum. The second one would be a range, and this is a really important clue because ranges act like magnets. What you want to think about when you talk about a range is you want to find levels of support below the range, find levels of resistance above the range, and literally buy off support, going back into the range magnet, sell off resistance, going back into the range magnet. That's kind of the way ranges work. Ranges also are notorious for, shocker, breakouts, right? Breakouts. There are three different types of breakout patterns we can use on this. We're going to cover those as we go throughout these charts here tonight. We'll talk about a couple on each of these markets. So we definitely have, again, we'd love to be a seller up here, back down into that trading range, because again, the range is a magnet and we have all of this bearish momentum. And then of course you have the big kind of hurdle we have, which I think is probably the third component here, and that is this rising support trend line. You could easily make an argument this move down, the bears have now tried to take it lower once. They've tried to take it lower twice. If you're a client of mine, if you've been to my video course, you know the 2-try rule is a big part of price action trading. And of course, at this point now, there's that rising support trend line right there. That's a big challenge. That's a big intimidating issue because now the sellers, they just don't have any clear line of sight here. And so, again, I think it's too early to call this a reversal just yet, but these are the scenarios where a reversal is, I don't want to say likely because it's almost 6 o'clock in the evening right now. So we'll see how the market opens up. But this opens the door for a quite easy reversal here. We'll have to wait and see if we get one of our reversal patterns we'll talk about here tonight on this video. So those are kind of, that's the good, the bad, and the ugly right now on the S&P. So how do we trade this? How do we trade it? What if it goes up? What if it goes down? One thing about trading I've learned over the years is as a trader, we don't really care what direction it goes in. All we care about is, do we have a plan to follow in the event, right, that happens? So as we go higher, how do I trade it going higher here? As we go higher, the only real way to sell it, because of course you've got this rising support trend line, the only real way to sell it would be we go up. We haven't broken above that swing yet. So it would make a lot of sense for there to be a lot of bears hanging out right up in this area. Again, there's a big move down, right? That huge move down. So you have to think there'll be some bears there. Again, I would expect that trend line to be a concern. And because of that, you want to think about a trap entry. Whatever we're worried about, in this case, selling into an area of support, the trap entry is going to be your best option as we try to make that run lower. Okay, this is kind of a variation of our failure pattern, but really the goal of this trap entry. Buyers, of course, try to buy the first one. They go lower. They try again. That trap entry is a money trade all the time, right? But in this one, it's almost the only way to do it, right? Is to short. Again, trying to get as high up as we can here without selling into that rising support. So as we go a little bit higher here, that's the way I'm looking to sell this. Not going to be that easy. Got to stay patient. Again, wait for that trap. And again, traps are great because you're selling a little bit higher than normally would, and you get a chance to avoid that rising support. As we go higher here, what do you think would be the best way to buy it on a breakout? Now, again, there are 3 breakout patterns we'll be talking about throughout this video tonight. I'm going to cover one of them here on the S&P, and I'll cover the other 2 as we go forward here. So make sure you watch the rest of this video here tonight. Now, think of this area. Think of this kind of area right here as being a bit of a support area, right? It's resistance right now, but oftentimes what will happen is when these big bear moves like this, the market will punch up. Right? Let me get rid of this yellow line here. The market will punch up. Think about that, right? Kind of that area here again. The market will punch up. It'll pull back. And that's when you can oftentimes get this beautiful, we call a failure into pullback combination. Now you'll notice I'm not going to try to predict that reversal, or that breakout. That's a lot of times they fail, like that one back there, that failed. So it's oftentimes these moves higher, they come right back down again. So I'm not going to take the first leg higher, but once I see, again, the key is these like to pop, right? To make that big pop. And then again, you got some bears coming in, trying to sell into it. This is where we can kind of trap in those bears. Again, think about these prior highs up here. We can use those as support here. This trend line comes over, right? That's going to be keeping those bears honest. And so that's going to give us a really nice failure into pullback combination. Right now, guys, we see a lot of these, again, failure setup into pullback setup, kind of combination setups. We see a lot of those failure into pullbacks. I love traps. I want to go over more details of these specific entry patterns, but I got a lot to cover in this video. So if you want to get a much deeper dive into the entry setups, and really, I'll put a little button up here for you for our free quick start class. This quick start class is great because it'll bring you right up to speed with how we trade in our trade room. You'll learn my 3-step strategy, right? How we find the best 3 to 5 trades every morning, almost every morning, in our daily trade room. You'll learn how to find support and resistance. Most importantly, how to time those entry properly. I have hundreds of examples of how we apply these failure into pullback combinations and everything in between inside that quick start class. So again, grab a little pop up there in the upper right-hand corner. If you're trying to earn daily income in these markets right now, that quick start class will give you a great roadmap to follow. Now, back to the action here. Where would the buyers be trying to get to if we can get that pop up? And again, this is just one of the 3 breakout patterns. If I get that pop up, get those bears trapped, and that failure into pullback combination, this range overhead is an easy magnet for those buyers for tomorrow. If things really get good, keep your eyes on that 43.50 area because that's the closing price from last week. That would really be where the buyers would really like to get this thing going here if we can get this thing to reverse and go higher. Again, that's one of the reversal patterns I'll be looking for here. Now, as we go lower, how do we trade this thing as it goes lower here? Well, the most important thing you want to remember is if the market rolls lower, we're going to trade the rotation. And there's a good chance there's probably going to be a trend line, coming down right there. That trend line, let me add that trend line in here right now. That trend line, chances are that's going to be where this market wants to go. Obviously, the measured move I mentioned earlier, right? But think about that trend line coming down as being a really easy kind of visual of how I've got to get into a trade before we get there. Most of the time, again, we talked about the pop up, the 1, the 2, the trap, and the go. A lot of times, and we saw this today in our trade room, a lot of times you'll get this market to, pop up. In this case, talking about 1, 2, but a lot of times you get something like this, where it'll roll over and run going lower. And when that happens, my favorite trade is going to be a trap entry off the high of that channel. Okay, now what we're going to do is, again, we're looking to short off the high of the range, right? We're selling at resistance above the high of the range. And then as we're rotating lower, we're what we call trading the rotation. Now, again, the ideal entry here will be a trap entry, right? They just always seem to work the best in this particular scenario, right? Target off at the low, target off at that trend line. If you get a runner, right, grab that measured move. Now I say trap entry here. It could be any one of the price action setups I talk about in that quick start class, right? It could be a failure, could be a trap, into a pullback. Again, I'm not going to go into more of those small nitty-gritty details, but again, if you grab that free quick start class I keep talking about, you'll learn more about how we trigger those entries, and there's a lot of examples of that in the quick start class. So as we try to go lower, I'm be looking for that new channel coming over. And then again, we'll drill down and we'll find that entry. Maybe it's a failure or a trap or a pullback, right? Selling off of that high. So that is how I'm going to trade this thing as it rolls lower. Now, what if we end up back at these lows? We tag that trend line. Now what? Right? Now what? Right? So we find our shorts on the way down, whatever the case is. Can I buy down there? Oh yeah, you definitely can buy down here. What's the problem though? The problem is momentum. Momentum is all bearish at that point. The range above us is still a great magnet. How do I buy off that low? I buy off the low using a failure pattern. Simply put, ranges are magnets. Focus on failures, again, at support. The problem we have, of course, is the momentum. So in this situation, we want to take out the big guns and we want to use what's called a 2-try failure. Again, those 2 tries we talked about earlier. It's a pretty simple pattern. You'll let the bears try once, let the bears try twice. Once those bears, remember, you want to apply this at an area of support down here. That's going to be the key down here. Once those bears try twice, now think about it. The range is the magnet. All their stops now are easy. Remember, those stop losses, those are seller stop losses, which means they're actually buy orders to get them out of those positions. If I can get that strong run down, take out those lows, get those bears to come in and give me a 1, give me a 2. I can now, and there's a lot of variations of this particular entry. Like I love a trend line right there. That's a great entry. A trap below that low. That's a great entry. But what you want to think about is that the stops are right above those highs. So now once we see a nice strong signal candle here, that's your entry right there. All those stops get hit, and oftentimes what will happen is the market will rip higher, and then remember what I said before, trade the rotation, right? Same idea. Mark up that new channel. Find that. Again, I'm showing you traps right now because those are oftentimes the best one, but that's a money trade right there. And I know it's against the trend. I get it, but remember, it's a range. Okay, so we understand it's against the trend, right? We go against the momentum. That's fine. As long as we have bears trying a couple times, we can use those stops to really fuel this move going higher. And then from there, of course, right, we can grab that first pullback off the low. Remember, one thing about ranges, trade the rotation. Find that support level, find that failure, in this case a 2-try failure, and then trade that rotation back in the opposite direction. Where would my target be if I take that trap? Well, the easy one would be measure the amount below the range, project that above the range, and that will, 9 times out of 10, that's going to give you a good target. Another easy way to do it is to draw a trend line. Draw it off those highs over there, right? That's going to make for an easy target too. So that's where we're looking for those targets. And then again, once we get there, of that short back down to the range again. We'll know more about that obviously tomorrow morning once we get into this stuff tomorrow morning in the trade room. But now at least we have a good plan of attack ready to go. Now what we need to do is wait for more overnight session to begin and see what happens in the overnight. All right, S&P is also to go. What do you think? With me so far? If you have any questions, again, drop those questions in the comment section. And I hope by now you hit that like button. I hope by now, if you're still watching this right now, you hit that like button and make sure you subscribe so you don't miss tomorrow. How about some NASDAQ? Boy, NASDAQ is very similar here on the very similar to the S&P, right? Big, strong move down. That's the first component. We could definitely see the strength of that move. Anytime we have a very strong move in one direction, we expect another leg in the same direction. Again, think about that measured move down there where the market would like to go here. If they get there, if they get their way, that's a pretty good, again, that's the first component. Second component here, of course, is the trading range. Again, very similar to the S&P. The range, of course, acts like a magnet. I want to find levels of support below, find levels of resistance above. I want to sell at levels of resistance. I want to buy at areas of support, and I want to trade the rotation, right? Trade the edges, trade the rotation as we keep rolling through it. And then, of course, right, with this range, we also have a possible breakout. Again, we've talked about 3 possible breakouts here. We covered one of them on the S&P. We'll cover another one here today, right, on this NASDAQ. I'll cover my favorite breakout here on the NASDAQ here for tomorrow. If the buyers get their breakout going higher here, much like the S&P, they got that range magnet overhead at 14,700, let's say. That's an easy magnet. Well, maybe not easy. It's a pretty big, as you can see, big reversal there. But if the bears can get, if the bears lose their grip on this and the buyers take this, I would expect that to be a pretty easy short squeeze going higher there. And then, of course, the big, again, kind of the big problem we have right now is, you got it, that rising support trend line. There is definitely no, I don't think anybody's going to miss that rising support trend line. And again, you can see right away, we take out that low. The bears have tried a number of times here, and surprise, the buyers are again, I don't want to go too far ahead of myself and say we're ready for the reversal, because we're definitely not there yet. But again, these are scenarios, these are situations where you can definitely tell the bears have struggled. There's obviously a rising support trend line in their way. There isn't an easy line of sight for these bears to get this thing going back to those lows. This gives those sellers a little bit more difficulty, and therefore opens the window for those buyers. Doesn't mean it's guaranteed to be a reversal, but it definitely does. It definitely does open the door pretty wide open for it. The buyers just simply have to take it from there. All right, we're looking pretty good here. So very similar on this. The best way to short this market as we try to go, higher, I could easily see them trying to go in, take out that high, which I believe there's still a couple ticks, a point or so off of that high right now. If we go up, and then now, of course, the buyers, right? The buyers try once, and really the only reason why I want 2 tries on this is just because I need a trap. I want that trap here. So you really want that trap entry for that short going lower. That way you're able to sell well above that rising support. As we go higher here, can I buy the pull? Can I buy the breakout? Absolutely. Again, think about this area right there as being a little support, strong breakout. We slice back below the moving average, trapping those bears, bear failure, bull pullback, and we're off to the races there. That's a pretty easy trade. We talked about that earlier here. Another breakout, kind of the second breakout pattern that I'm looking for. And again, this breakout pattern could also be applied to the S&P. Everything I'm talking about tonight can be applied pretty much universally across all 3 of these markets. You'll see gold here in a moment. Another one here I'm watching will be a 2-try breakout pattern. Now, 2-try breakouts are pretty simple patterns. The key is you want to see it really pop. And once it really pops, then you wait for a shallow pullback, a higher high in price, and then you look for that trap. I call these 2-try breakouts because basically the bears try twice to take it lower, and that trap is where the money is. It really is. It's a very, very reliable trade. Anytime we see a strong move, a shallow pullback, in this case, right? In this case, a higher high, what happens is that strong move, right, that gets the juices flowing. The shallow pullback, of course, drives the buyers crazy because they want to get in, and the higher high confirms the move. I say confirms the move because sometimes what happens is it just goes up and comes right back down again, right? Let's face it. That happens all the time, especially with a big move down like this. So strong move, shallow pullback, higher high in price, trap. That's a fantastic trade, looking for it, going higher, and again, get that range up overhead. You can actually see this pattern set up right there. Same thing. Strong move down, shallow pullback, lower low in price. No wonder. Everybody wants that short. Everybody wants that short. It's a great setup there. Okay, that's a good example. Again, flip it around to the buy side, and that's exactly what we're looking for over there. All right, that's a pretty easy setup as we go higher here. I've got one more breakout pattern we'll talk about on the gold, and the one on gold we'll talk about is probably the easiest of all three of these breakout patterns. Now, as we try to go lower, what do you think as we go lower here? Yeah, obviously, again, we're looking for that trap, right? Get that trap short to avoid that trend line. Again, we can trade the rotation. Now, if I think about this rotation, let's just kind of make it easy here. Mark up that one, right? So right off the bat here, that's where we anticipate things will want to go. Again, we can find that trend line off those lows, and you can see there is plenty of space here right now if this thing runs lower and can give us some strength, right? Get that trend line down there. It's a pretty nice, again, get the measured move waiting there as we go below. How do we sell it, though, as it goes lower? Very similar here to the S&P. Let's say, of course, we pull back the buyers once, the buyers twice. We get that trapola off that high, and we blast going lower. Now you trade the rotation, right? We're selling off the highs. Now trade the rotation. Find that low, find that high, and you want that first test, right? That first pullback. I say first pullback, but, again, it's not going to be a pullback setup. A lot of times what will happen is you'll get something like, right, where it'll run lower. If I can kind of zoom in a bit closer on this, a lot of times it'll bounce and then run lower. Moving average comes over. I'm going to mark up that low, mark up that high. I'm going to pop back up, get above the moving average, right? Buyers try to buy off of it. Once they do, their stops are sitting right below that low. We can short right into those stop losses. It'll look that, again, that failure almost always pulls right back into a pullback setup. Look left. There's one right there. Right? So strong move down. See they pop up, they go above the moving average. So the buyers come in right there. Once those buyers come in, bam, stops are right below that low. And then look, failure pattern, there's your pullback combination right there. All right? And that's exactly what you'd expect. You get a strong run down. It's that failure into pullback. The trade may not go for a home run. Most of the trades we take in our trade room are, relatively small scalps. Take the first profit target, remove that, get rid of the risk, tighten the stop up, try to see how far it'll go. We don't need these. One of the most common misconceptions is that every trade has to be a home run. It really doesn't. With the luxury of futures, because futures have leverage, right? That's why we love futures for day trading, for short-term trading. They're so much easier than stocks. They for many, many reasons. I talk about that, by the way, in that quick start class of why I chose futures for short-term trading over the stock markets. A lot of people like stocks, but I'll tell you, once you trade futures, you'll never go back to scanning and all the pattern day trading rule, the margin requirements. They make stocks really, really difficult to trade. Anyways, so that's how we trade this thing as we go lower, right? We trade that turn, we find that channel, we drill down, and we find one of those entry setups we keep talking about. Again, I cover all the details right in that quick start class. And then don't forget, if we do get down to these lows, let's say we do get down to those lows here. At this point now, can I buy it? What do you think? Can I buy it? I can definitely buy it. I just have to what? I have to give the sellers the benefit of the doubt, right? Let them try a couple times. I like to use the 2 try. So I'll wait for the bears trying once. We'll wait for the bears trying twice. Again, we're at a support level with the range overhead. The reason why we're looking to buy is because of the range. The reason why I want 2 tries for the bears is because of the momentum, right? All of that momentum as we go here. So once those bears try twice now, stops again are right above those highs here. Again, maybe it's a trap below that low, maybe a trend line. We're coming off. Again, there's a lot of variations of this. In fact, you'll learn those variations in that quick start class. And of course, we get that nice strong signal. Stops are right overhead. And again, we're buying now into those stop losses. At this point now, the rotation begins. We now mark up that new high. We drill down. We find that, right? We find the entry. And I say drill down. Remember, guys, this is a 5,000 tick chart on the NASDAQ. I'm not finding entry setups or qualifying entry setups on the 5,000 tick. We'll drill down to a faster time frame and find the entries there. You'll, of course, learn all that stuff inside that quick start class. So again, we're buying off the low, and we're buying that, buying that rotation back up in the opposite direction. Pretty straightforward plan there on the NASDAQ. And then don't forget too, if the market was to really run lower, that same breakout pattern I mentioned earlier, right? We call these 2 try breakouts. That same breakout pattern up here can also be used down here. Remember, so breakout patterns can be applied to both sides of that trading range. I do not mean to ignore, the downside, right? Let's say, for example, we get that 1, 2, 3 turn. We get that channel. We trade the rotation. And then all hell breaks loose. The market just punches, right? And runs lower here. Punches, runs lower. Shallow pullback, right? There's your trap right there. Okay, that is a great trade. You're right. We sell off the high, trade the rotation, trade the breakout, right? Trade the breakout. Remember, if you have enough strength, if there's enough strength going lower here, there's a really good chance that trap will work for you. There's a really good chance, no matter where you are. Okay, remember, anytime you have a lot of momentum in one direction, the odds are very good you get another leg in the same direction. Just got to find the right entry and hit it with confidence. So that's definitely potential as we go lower. All right, and again, remember, these breakout patterns can be really applied to the S&P as well. So hopefully you're watching the entire thing here tonight so you get the whole picture for tomorrow. All right, NASDAQ, got you ready to go here. Last but not least is the gold. Gold, of course, is a very similar, but you could definitely tell there's some big differences here, one of which being the direction of this market right now. Now, gold has definitely been a bit skittish lately. You can definitely tell that they're talking about, monetary policy right now. So if you're a gold trader, just stay patient right now. I know the market hasn't been as easy over the past few weeks. Maybe not easy. It's just there haven't been as many reliable setups, but that's why you trade a strategy like the one we use in our trade room that really can be applied to any market that that is moving well here right now. So gold, again, definitely being affected by, again, we talked about the debt ceiling negotiations going on right now. The Fed's talking about raising rates or tapering their stimulus packages. So that's all kind of creating that uncertainty and that kind of skittishness here in the gold right now. So just going to be careful with it, or be patient with it, be understanding with it. Don't force trades, because I know just a few weeks ago gold was really ripping for us, and we're getting a lot of good setups each day. So what's the big play on the gold right now? Boy, there's a lot going on here right now in a small chart. The bears, of course, took it lower. They tried. Isn't this a great example of that 2 try reversal, right? 2 try failure. There's your 1 try for the bears. There's your 2 try for the bears, right? Like, this is the money trade I'm talking about. This is that 2 try failure I keep talking about, right? At the lows of those ranges on the S&P. Sure enough, that's where it was, right at that range low, right? Like, is that not exactly what we're looking for tomorrow at those range lows as well? So a great example there. So we end up basically running lower. The bears end up trying, and the market just punches and runs higher. As always, anytime we see a strong move in one direction, we anticipate, at the very least, a retest of that high, which they haven't done yet. And at the very most, we anticipate now a measured leg, right? A measured move going higher here. So definitely want to be a buyer right now. I am definitely not afraid of being a seller. The big reason why I say that is because this range, you can kind of say it bled over here, right? Basically, this is just one big range down there, and that, of course, will act like a magnet if these buyers lose their grip on this. So, again, buyers have control right now. The strong move up. That is one very big part, or one important component. Second component here right now is going to be this range. This range is not easy to find at first, but if you kind of dig into it in a faster time frame, you can see there's a range right there. And that range, right, is kind of the second most important component. The third component here, what do you think is the third component here? The measured move is nice. We get that top over here. You know, get the major top there at 17. So, yeah, obviously the buyers, if they can get this thing going here, that 1785, 1790 area is definitely going to be an easy objective. The bears, of course, they would love to get this thing back down to retest those lows. And if all hell breaks loose, 1721, 1718 area, which is that big low we saw from early last week. All right, how do we trade this thing right now? We'll get the lay of the land here now. How do we trade it? One of the breakout patterns. You know, this is a really good example. We have a bull market with range here right now. A breakout could easily be on our radar for tomorrow. We talked about this one already, right? We mark up that high, that pop up, that pullback, get underneath the moving average, trapping those bears, right? Get that failure into pullback combination. Great breakout pattern there. Or maybe we see a jump up. We see that punch, that shallow pullback, that higher high, traps, baby, traps. Great setup there. That second one. What's the third one now? The third one is the easiest one, and that one's called the 1 2 3 breakout. Now, what you want to think about is the range is the magnet. So you want to see a 1 2 3 move. Remember, we cannot buy that first pullback because the range. And, of course, you're buying right into that high. However, if those buyers, if they can take it up, get that pullback, and then jump off the moving average, now what that does is it creates a channel for you. Draw that channel off the high, mark that channel low, and, you know, again, this is a 1500 tick chart. We're not going to trade the 1500 tick chart, but you want to buy that first pullback off of that low. A lot of times what happens is we'll get that pullback, it'll get underneath the moving average, and you'll get one of those failure into pullback combinations. Okay, again, very common we see in our trade room. Failure into pullback, right? Combinations there as we come, you know, bouncing off the low of that. So think about that area, kind of zoom in on that area right there. That's what I'm thinking as we go higher. And again, maybe it's a trap. We'll take we'll take whichever of these entry setups we can find here off the low of that channel. Now, one thing I want to make sure I mention, it's tempting to think, well, wait a second, couldn't this be a 1 2 3? It definitely is. It definitely is. But don't be surprised if you don't get the pullback all the way to that big channel. All right. If this thing races higher here, if we do race higher here, what's more likely is this one is the 1 2 3 breakout. So you see the difference there? It's a much steeper channel, right? It's a much tighter channel. Get that trap, get that failure, get that pullback, right? And you're going from there. So that will be a variation of that. Again, 1 2 3 breakout pattern here. The ideal scenario, though, is we go up, make a new high, we pull back, the buyers hold it, they jump off the moving average, mark up that high, mark up that low, we're drilling down, and we're finding that first pullback. The first test is always the best test, as we say, right? It's not necessarily a pullback entry, but it's just I want that first test off that high. Now, we do want to avoid the middle here. And again, with this debt ceiling negotiation going on right now, we may see a bit choppy here on the gold right now. As far as a pullback goes, the big concern we're going to have on this, if the market does pull back, is this will be seen as a blatant failure here going off these highs. Right, all that momentum. If this thing pulls back without hitting these highs right now, we have not a big problem, but what that probably is telling us is the buyers are weary of buying high on this. And so we got to be very careful now. This is a great example of where you would definitely want to use a 2-try failure to protect yourself against that. So bears try once, bears try twice. And then again, I've said this a couple times already, that failure. And then this is definitely where that first pullback or that first test is almost a must-take trade at that point, because get the failure, and then now, remember, it's already a bull market. So now you know where that rotation wants to go, right? So again, it's that failure. Again, a 2-try failure is what we're looking for tomorrow. And then again, that first pullback, that could be a trap. It could be a failure into a pullback combination as we come off of that low. Those would be some really good setups there as well. That failure into that pullback combination. And then what if we roll lower? How could I sell it down here? So in this situation, what's probably going to happen is the market will if it does go lower, it'll probably grind lower or really spike lower. So here's kind of two ways to think about it. If we end up kind of grinding lower here, right? Grinding lower, you know where the market wants to go. They want to go back down and retest those lows. What we want to do is mark up those swings, find a relatively tight channel, and look for that trap off the high of that channel, right? Or it'll usually be just above the high of that channel, right? So if it grinds down and goes lower, I call these runaway markets. You know, we oftentimes think runaway markets are very fast. Runaway markets oftentimes are relatively methodical and slow, and which makes them kind of difficult to trade because they're not very convincing. You know what I mean? So this move going lower may be relatively slow here. If it dumps lower and then kind of grinds lower here, find that trap. Everybody's waiting on that trap going lower. And as I always kind of remind you guys, if that trap turns into a relatively deep, pullback. Now think about that edge right there. See what I'm doing? Yep. Find those buyers, get them trapped in. See that, right? That's that same breakout pattern that we talked about on the S&P earlier, right? That was the first one we talked about. So that same breakout pattern can play in now. That's a great trade for tomorrow. Maybe we don't get the trap we want. Maybe it pops up, get a failure pattern into a pullback setup. Okay, those will all work. And then if it really spikes, if it really runs and goes lower, you're going to want that 2-try trap. Strong move down, shallow pullback. If I had to guess for tomorrow, I would guess that's the trade we get on the way down, if I had to guess. Just because of the range down here, buyers are trying a couple times and failing. So if it does punch lower, shallow pullback, right? Lower low in price, that's the rule. That trap high, money. That's a great trade. If we really get lucky, we can draw that trend line, find that channel. Mwah, beautiful setup there. Selling right off the highs of that channel. Again, we know where the market wants to go here. So guys, that's my plan for tomorrow. Now I'm sure the market will throw us some curveball at some point overnight or tomorrow morning. That is exactly why our trade room is such a great shortcut or great advantage. I'll tell you, there's just no better way to do this than to take my video classes, learn the strategy, and then come out and trade it with me every day. We have a bunch of fun. We usually find the 3 to 5, right, best setups every day at the opening bell. We'll cover everything tomorrow morning in the trade room. I'll put all the membership links. I'll put all the different membership specials. I'll put everything on the website right below me tonight. So grab that link or hit up the description of the YouTube video and grab that link there. In the meantime, don't forget, you can always call the office. I'll be here if you guys have any questions along the way. Have a fantastic, fantastic rest of your evening out there. Rest up. Get a busy, busy day tomorrow. And again, first week of the month, always a great week to be a trader. Hopefully, I'll see you tomorrow morning at the opening bell. Hopefully, you grab that quick start class to learn the strategy we're talking about tonight. And of course, if I don't see you guys tomorrow morning at the open, we'll see you guys tomorrow afternoon or tomorrow evening, and we'll do it all again on the next edition of our nightly newsletter. Guys, my name is Joseph. Thank you so much for tuning in. Make sure you subscribe to the channel, hit that like button, and I'll see you guys tomorrow. Be well out there. Be nice to each other. Be here next time. Adios, amigos. Bye-bye for now.